Welcome back to the Value Investors Club. I'm your host, Timo Wunderlich. Let's get right into it with VIC readings, the format where we look at the best of the best value investment recommendations out there by the best of the best value investors out there. Today we have ARHAUS Inc., ARHS. Price at the point of filing was $9.12. Description. This one just reported and is just up a couple percent at the time of this note. So I think it's a fair game. Pretty quick hitter, but we can follow up. ARHAUS just reported 3Q results in which they essentially doubled street EPS estimates. Impressive, but that's not what's most interesting to us. Buried in the release is their underlying demand comp for the quarter, which actually accelerated meaningfully on a 3-year basis, and our store level work, supplier industry checks, and data suggests trends have continued into 4Q. I'll come back to this in a sec. The other reason the next few quarters are going to be special is that meaningful price increases will be flowing through the P&L at the exact same time when freight and other cost side pressures are falling off a cliff. On price, they took 3 mid-high single-digit price increases earlier this year, all of which don't hit the P&L for roughly 6 months. On costs, they had over 700 basis points of headwind that is about to become an enormous tailwind. Spot container rates have gone from $18,500 to $5,000 over roughly the past year, illustratively. What's more exciting is, I think, some reasonable analysis that is just a few degrees removed from this company has people very sharply off sides. Short interest is at all-time highs on the back of RH saying ARHS is being promotional. They were actually less promotional year over year on a 3-year basis, and our data scraping and other work shows the same for 4QTD. One research shop came out suggesting that the EPS could get cut in half next year, 35 cents, and others on the buy side have been thinking written comms are currently running down 15%. We just learned we just learned they're running up of 15% for suggesting the EPS could get cut in half next year, 35 cents. They're running up 15% for 3Q and still healthy positive in 4Q. Seems like anybody short needs to cover full stop. Even if demand comes were to slow to negative on a 1-year basis, but still healthy on a 3-year basis, it seems like stock is a massive long. However, they are doing far better than this in real time. Comps just accelerated by 20% on a 3-year basis. Point is, we think next year earnings are probably more likely to be up 50% than down 50%. And in the long term, there are only 2 consumer companies I've seen demonstrate new store productivity like these guys, Chipotle and Lululemon. And clearly, they are taking market share like clockwork, which are 2 characteristics that garner growth multiples. So even in a new rates regime, businesses that grow units profitably at 1/3 this quickly can easily trade at 20 to 25 EPS, and on current year EPS of at minimum $1 and out year $1.50 EPS feasible, we can see valuation at $20 to $37.50 in a wide range over time. In a wide range, 100% to 300% upside. We'll follow up shortly with a proper write-up or at least a supporting analysis of the back of this, but thought I'd send a few thoughts out here quickly as fodder. Catalysts above. Thank you very much for tuning in. See you next time. This is not recommendation, not advice. Please do your own diligence before